Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 28th. I don't know why I always forget the date when I'm doing these things. Today's the 28th of August. We got a few days left of August and just a week until my kids go back to school, which will be a great time. All right, today we're going to talk a little bit about Statistics Canada report. We're going to talk a little bit about what the markets did today. First, let's do a rundown of the futures markets today. We saw canola down $15 a ton today, closing at 635.70. There's some significant technical things that happened today. We'll take a look at that in a second. Minneapolis wheat is up half a cent at 576. Kansas wheat up 2 3/4 to 512 and a half. Chicago wheat had a good day today, up 4 3/4 to 524 and a quarter. Beans up half a cent at 1047.75, essentially unchanged. Corn up 4 to 406. Soybean oil down 72 points at 53.15 per pound. Canadian dollar seeing some more gains today, 22 points at 72.73 today. Live cattle and feeder cattle took a little bit of a breather today. 239 for live, to 366 for feeder. Both of those had made new highs yesterday. So these minor moves lower don't really mean anything on the technical front. This market continues to seem to be wanting to make new highs all the time. So let's get into some of the happenings today. So canola was down about $5 before the Statistics Canada report. We'll get into some of that in a second. It then faded throughout the day. I think there were some other circumstances affecting canola other than the StatsCan report. So I can't say that this totally ruined that Statistics Canada totally ruined canola today. There were some other factors, but we'll get into some of those fundamentals here right now. So here's the Canadian production estimate: 19.9 million tons of canola production for the 2025 crop year. Again, this was a Statistics Canada model-based estimate. So no surveys done. So we do get another survey on the 9th of, we get another production update on the 9th of September when Statistics Canada releases their S&D, their stocks number, and their next production update. In Canada here, we like to do it every couple of weeks and then not for the rest of the year. So that's how we work. They also upped the 2024 production by a little bit. I think it was 19.185 prior to today. They upped it to 19.239, as you can see here. So little adjustments made to the production side. On the S&D, this is the yield that they posted: 41 bushels per acre. That might still be conservative. I think this was above trade estimates, I think, but overall, strong yield. We've seen stronger yields like in 2020 when we saw some big production as well. So it'll be interesting to see what the survey results say. We know that there was a wide variety of fields out there, some absolutely performing really well, even above bumper, some that were struggling. So once we get the survey results in a couple of weeks here, we'll be able to kind of ground that a little bit more. I think more people are biasing towards higher yields even than this 41. So keep that in mind. Statistics Canada also raised the canola planted acres today, so that added to the production as well. 21 from 2145 to 2162. So not a huge bump. 15,000 acres or so, but still is a bump up in acres. Although they did lower the percentage of harvested acres, so a little bit of a rebalancing, so to speak. And, it's not to say that this number is wildly bearish either. This number actually came in less than analyst expectations by about 500,000 tons. So that's probably what surprised the market, or folks looking at the market today, was that it should have been a bullish report kind of on the expectations versus, reported. But the market, took some sell signals away from the market. If you do want to get our full breakdown of our fundamentals for canola, wheat, and all the other commodities, including some of the special crops, we are going to be putting that into our weekly report that we send out tomorrow. If you'd like to get a hold of those, they're really good. You can go to CanadianAgMarkets.com/subscribe. We'll make sure to get you hooked up with that report this week. And it's only $99 a month, and you can cancel anytime. So really, there's not a lot of risk for you here. All right. Before we get into what happened here in November, canola, I do want to kind of showcase a little bit of, not that I told you so or anything like that, but here's what we said just on Tuesday about this canola market. I'm going to play this for you. Low the prices have been recently. Um, Here's the canola seasonal chart. We are seeing this little rally here that I have put on the screen. And, that does suggest that we might see a little bit more weakness as we move into the beginning of October um, on this contract. This little first notice here, that would be all right. That's where we're at for canola. That's what we talked about on Tuesday. This is a seasonal normal thing to happen. We do tend to see canola fade out into the end of September. So we may not have seen the lows in this market, and it may continue to haunt us a little bit. Today's action, kind of uh, potentially kind of proves that theory, I suppose. There are some technicals here that could be considered positive, and one of those would be that the market tested the bottom of this channel that we've been watching here, and it tested the low that happened after the Chinese tariff announcement. Closed, it's still closed literally a dime below the lows on that August 12th day. And it did move a couple dollars below that during the trading session. It's really difficult to call that strong support at this point in time. It still looks like this is going to sell down. We do have the next level of support here is down around $600, as you can see here, and even lower if you look at the contract low here at 580. Not that I'm calling for it to necessarily get as low as 580, but we could see, particularly if we see follow through in the next couple of sessions on canola to the downside here, and it starts to break all those technical trends. I think then we're probably going to go to 600, 610, somewhere in that range. Tomorrow may not be a good judge of this. Fridays tend to be a little bit lower volume trade, and I don't necessarily trust Friday's trade normally. So, I'm going to be looking into the beginning of next week to see what kind of signals we get in this canola market for, I don't know what you call a medium term. The next 4 weeks or so might be determined in the next few days of trading here. So just to keep that in mind, I don't want to blame Statistics Canada for all the problems that we had in canola today. We did see some losses in the soybean oil market to the tune of about 2%. So we saw pressure in other areas of the market as well. We did see some significant pressure in the Euronext. Did I? No. In the Euronext contract as well, we saw some big losses in November rapeseed there. And this again was, this big gap that you see lower here. This was prior to any of the Statistics Canada information or anything like that. So, this market was under pressure already through, the end of yesterday. It did kind of rally, but then all of a sudden fell back off as we got into the day. This would have happened at about 3:45 Central Time, and then started to fade out. This area right here, where you see a bump in volume, that's when the North American market opened, and we saw the Statistics Canada numbers. So that's when that was digested around this time, or 7:30 in the morning, which would take us somewhere in here. So we did see some continued weakness in the Euronext rapeseed contract after Statistics Canada. So it's possible that some of the pressure coming into the canola market was also seen in the, close to the end of the session in Europe. But we started seeing some of that weakness ahead of the Statistics Canada release. So it's not like the Euro or the rapeseed market fell solely because of Statistics Canada either. All right, we did see some up days in wheat today. HRW, although, did post a new low, which seems to be happening every day now. Although it did rally into the end of the day, we did see a green candle. Still, the close was below the open of yesterday, so this still looks bearish from an overall standpoint. But we don't see green candles on this HRW as often, or very often. So just wanted to highlight that. We did see some gains also in Chicago wheat. As you can see here, that 20-day moving average continues to be a bit of a resistance level there. It did rally, I think about, what did I say before, a nickel or so. And, trading 529 now, which I think is still a premium to the HRW, if that gives you any indication as to how supplied the HRW contract is. All right, moving on to Minneapolis. We did not make back very much of the losses from yesterday. We talked about the losses yesterday in our video, um, but it's still a green candle. Did not make a new low today. I don't know. We're just in the seasonal weakness of this market, and it's going to be a waiting game, as we said yesterday. Talking a little bit about corn today, rallied off the 20-day moving average. So after we broke above that a few days ago, that 20-day may now be moving or looking at becoming a support level. So if we can see some follow through on that, that would be good as well, particularly if we break above this 50-day moving average. It seems that that was resistance the last time it tested, on Monday. All right, one more chart here. The Canadian dollar. We are seeing this continue to rally today. Again, it is testing the resistance level here of the 50-day moving average. So if we could break above that, technically that probably means some further push upwards. This isn't necessarily a good thing for Canadian farmers. We like to see a lower dollar because it makes our export products more attractive. But that's what's happening. This isn't happening either on US dollar weakness, or at least broad US dollar weakness. So, Canada's just enjoying a little bit of a rally here, which isn't necessarily tied directly to the US dollar. So, that's what we have for you today. Thank you for watching. Again, subscribe to get our reports at canadianagmarkets.com/subscribe. We will see you again tomorrow.